Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And the same for the NASDAQ 100. When traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups to that asset can be taken with futures, shares of stock, or options, depending on that asset. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Monday, June 24th. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis for today. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, let's start with economic data and events for the week. And let me bring up one other screen here. This is the events calendar on the Spotgamma homepage. And this is the events for the week. It's a pretty light week with one key event on Friday. So first of all, nothing today. Tomorrow, consumer confidence comes out at 10 a.m. And then on Wednesday, Chipotle Mexican Grill, CMG, does a 50-for-1 stock split and should start trading at the new price on Wednesday. Thursday, durable goods orders at 8:30 a.m. Eastern Time, also GDP. Again, that's Thursday, 8:30, durable goods, GDP. And then Friday, 8:30 a.m., the big data release of the week is the PCE data, the PCE price index. Again, 8:30 a.m. Eastern Time. And then at 10 a.m., Michigan Consumer Sentiment comes out. All right, so that's the data for the week, data releases. There are also a variety of Fed speakers throughout the week. All right, so that is the news for the week. Now let's move on to positional analysis. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I do want to start with a look at a larger time frame. I'm going to go to the underlying index. This is the SPX one-day chart in Thinkorswim. And let's take a look at this year after a big rally that began last year. This correction began April 1st. And then the rally resumed the Monday after the April options expiration. That was a slightly put-dominated options expiration. Rally began. Again, rally resumed. This is the May options expiration, and there was a little bit of weakness. It took a couple days to play out, a little bit of weakness after that May expiration. That was call-dominated options expiration. And then last Friday was the June options expiration that's shown by this vertical line. A very heavily call-dominated options expiration. So in a call-dominated market, there's a lot of positive gamma supporting the market. A lot of that expired. We'll take a look at that closer in just a minute, and could lead to some potential weakness the next few days. So we'll keep an eye on that. And certainly we've already seen the weakness beginning in the semiconductor stocks. That began last week. Again, more on that in a few minutes. All right, so that is the one-day view. Key turning points around the options expiration. Now let's take a look at a 1-hour chart so we can take a closer look at SPX. Again, this is Thinkorswim. 1 hour chart. It may be difficult to see here, but this line marks, this red line marks the May options expiration. Again, a little bit of weakness. It took a few days to play out. A little bit of weakness after that expiration. Rally resumed. And moved up to the 5,500 call wall and found resistance at that level. All right, let's take a closer look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. Oops. This line right here. Purple lines, lower and upper weekly expected move based on the options market, based on the closing price for SPX from last Friday. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday. And SPX did test the upper daily expected move earlier today and now is right in the middle in that range for the daily expected move. All right, so the upper daily expected move acting as resistance. All right, the dark red lines on this chart are showing Spotgamma levels. These are based on gamma-weighted open interest. They're proprietary to Spotgamma. They're provided to Spotgamma subscribers on a variety of platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, 5,000 is the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And note that level did move down pretty substantially from last week. On Thursday last week, it was at 5,500. On Friday, moved down to 5,450. And today has dropped down with the options expiration all the way to 5,000. So that is the absolute gamma strike. Next level up is the put wall at 5,300. That's the strike with the largest net negative gamma that can be expected to act as support. And above that is the volatility trigger. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive, and we'll see in a minute, just slightly positive. Positive for today. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. But that gamma notional, again, we'll see in just a minute, is much lower than it was on Friday due to the options expiration. Then finally, above that is the call wall at 5,500. That's a strike with the largest net positive gamma that can be expected to act as resistance like it did last week. All right, so the volatility trigger put wall and call wall all remain unchanged from last week. But again, the absolute gamma strike shifted pretty substantially lower. All right, let's wrap up our view of SPX by taking a look at a 1-minute chart just to get a closer look of the levels in play for today. This is looking at data for about 3.5 days, regular trading hours in the dark shaded portions. This is the resistance that I talked about earlier. This reversal was at the SPY 550 call wall last week, and then reversal at the 5,500 call wall. Now SPX trading in a fairly narrow range. Upper daily expected move acting as resistance today. All right, let's take a quick look at a SPY chart, a 1-minute chart for SPY, just to get an idea of the levels in play for today. For SPY on the downside, the 544 volatility trigger acting as support, and then this combo level up above acting as resistance. That was not shown in on the home page, so I don't have that on my chart, but it is shown in the in the script that Spotgamma provides. So this combo level acting as resistance, that's very close to the upper daily expected move for SPX. All right, so that's the range for SPY. All right, now let's move on to Bookmap. So Bookmap, this is the ES futures in Bookmap. I have my own cloud notes, so I can show SPX levels as well as SPY levels. Here's the SPY 544 volatility trigger that has acted as support earlier today, just after the cash open, then maybe again. I also have SPX levels on this chart. Here's the SPX 5450 level that was noted as support in the Spotgamma AM Founders Note. And just above that is the 5462 level. That was actually noted as resistance, but acting as support today along with the 544 volatility trigger. And note there is a pretty big difference in price between ES and SPX. That offset today is right around 67 points. So ES minus SPX equals 67. So I'm showing SPX 5450 at ES 5517. And I do post those index relationships that I'm using every day in Discord, in the Options Dash chat channel. All right, so that is the SB 500. Kind of done a round trip here today. And shifts and levels for SPY. The volatility trigger shifted lower, put wall shifted higher, and just like the SPX, the absolute gamma strike also shifted lower. So net, the shifts in key daily levels for the S&P 500 was negative, was slightly bearish. And generally, it takes several days after an option's expiration for the levels to settle out. All right, let's move on to NASDAQ. So NASDAQ making new lows for the day, a little bit more bearish than the S&P 500 due to weakness in especially semiconductors, also the Mag 7 stocks. All right, so this is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. I'm going to start with QQQ. QQQ down to this 475 level. That was noted as support in the Spotgamma AM Founders Note. Found resistance somewhere between the 479 volatility trigger and the 480 absolute gamma strike. All right, so those are the levels in play, Spotgamma levels in play for QQQ. 480 absolute gamma strike on the upside, 475 support level on the downside. And that 475 is a large gamma 2 level that's shown here. Let's take a quick look at NDX. NDX, another 1 minute chart. NDX trading below its volatility trigger at 19,680 and the zero gamma level 650 acted as resistance. All right, back to NQ now. So again, I have my own cloud notes so I can show QQQ levels. There's that 480 level on the upside, 475 that I mentioned on the downside. So in QQQ terms, about so far for today, about a 5-point range, which is about 200, a little over 200 points for NQ. And here are the volatility triggers. 680 NDX volatility trigger and the 479 QQQ volatility trigger. All right, so again, I post the index relationships that I'm using for both the S&P 500 and NASDAQ every day, and the NQ to NDX offset is about 270 points today. All right, let me check for questions. Robert, hello. Happy Monday to you. Welcome. Glad you're here. Sistock, welcome. Glad you're here as well. Ask what indicator is in the lower pane. All right, good question. And I have 3 indicators. I assume you're talking about the subchart here. So I have 3 indicators for futures, and I have a little bit different indicators for stocks. So we'll start with futures. The magenta line is the cumulative volume delta. So that has been falling today. You can just see all the magenta volume dots. These are aggressive sellers, indicate aggressive sellers, buy minus sell. So that is the cumulative volume delta. That is included with Bookmap. Then I have a couple of add-ons here. Actually, both add-ons. This is the iceberg indicator and the stop indicator. These are included with the MBO bundle. That's an add-on. So a rising light blue line indicates traders are buying NQ contracts with iceberg orders they use to hide their size. That's pretty typical behavior that large traders will fade moves. So they will buy weakness and sell strength. And that's shown by the light blue line. I have that in some mode. And then the yellow line is showing stop orders. And that typically moves in the direction of price. So that is showing that sell stop orders are helping to fuel the move lower. All right, so that's NASDAQ. We'll take a look at setups in just a minute. All right, so back to the S&P 500. Shifts and levels for NASDAQ, NDX, volatility trigger, call wall, and absolute gamma strike shifted lower, so a bearish hat trick. For NDX, put wall did shift higher. And for QQQ, volatility trigger and put wall shifted lower, and the call wall shifted higher, which is kind of strange. So net for both the S&P 500 and the NASDAQ, slightly bearish shifts in key daily levels. Again, it usually takes several days after options expiration for the levels to stabilize. All right, let's wrap up positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. I look at this every day. This gives me an idea of the expected volatility and trading range for the day. And this is gamma notional. Again, market maker's position on the gamma curve at the beginning of the day for the S&P 500 and the NASDAQ. Note, these numbers shifted significantly lower from Friday. For example, gamma notional still positive for SPX, but shifted down from 1.3 billion gamma notional to now 272 million. So essentially lost $1 billion in gamma notional. And for SPY, on Friday, gamma notional was 1.4 billion, and now has shifted to almost minus 400 million. So well over almost 2 billion shift lower in gamma notional for SPY. And one other thing, this is what Brent, the founder of Spotgamma, looks at. This Spotgamma gamma index for SPX. And the theoretical range for this is about -4 to +4. On Friday, it was about 3.7, so almost at the theoretical upper end. And now it's shifted down to slightly positive, much more neutral. So a lot of that gamma notional that was supporting the market on Friday has expired. And now I'm looking for wider trading ranges and more volatility, bigger moves. All right, so that wraps up that wraps up the positional analysis for today. Shifts lower in the some of the key daily levels, as well as a big move lower in gamma notional. All right, let's move on now to positional analysis, to execution. All right, so everything that I've looked at so far, other than Bookmap, is based on static data. Spotgamma takes open interest data. They update the levels once a day. Again, I'm looking at the shifts in levels to get a sense of whether traders are positioning themselves for higher or lower prices. In this case, looks like traders are positioning themselves for lower prices. Could be a little bit of weakness after options expiration. All right, so now let's move on to execution, looking at real-time data. As always, I'm going to start by taking a look at what options traders have been doing today. I'm going to start with the S&P 500. And this is the HIRO signal, Hedging Impact Real-Time Options, HIRO. This is available to Spotgamma subscribers. I'm going to start again with the SP 500. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. So this is the index HIRO signal for the SP 500. There are two lines on this chart. The white line is showing price for SPX, and the purple line is the HIRO signal. A rising HIRO signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling HIRO signal indicates they are taking negative delta options positions. They're buying puts and or selling calls. All right, so this signal today is very strongly correlated. Let's say price is very strongly correlated with the HIRO signal for the index products. There is another HIRO signal. This is the equity signal. And after around 10:10 a.m., there's been a strong correlation between this signal as well. So what this HIRO signal is showing is options trades and market maker hedging activity for a combined signal of all S&P 500 underlying stocks. So this is the equity signal, and this is the index signal. So let's just take a look at the index signal. I'm going to zoom in, open full screen here, and highlight a couple of setups. First of all, the HIRO signal started to move higher, right around 950, made a higher low, 950, shot straight up, traders taking positive delta positions, and price responded higher, and then reversed sharply lower, right around 1010. So about a 20-minute move higher, and then HIRO has been moving down or sideways since then. All right, let's go to the SP 500 futures and Bookmap. Let's zoom in on this. And look at the clues here in Bookmap. All right, so we know starting right around 945, 950, traders started taking positive delta positions. The volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So these are aggressive sellers on the way down. Sellers are exhausted. Little small volume dot there. Aggressive buyers start to come in. Retest of this 544 volatility trigger. And a lot of aggressive buyers come in as options traders were aggressively taking positive delta options positions. And then right around 10:10, that HIRO signal reverses. Aggressive sellers start to come in, and price starts to grind lower. Subchart again, cumulative volume delta rising, shifts from negative to positive. That magenta to dark blue shifts from negative to positive. Also, buy stop orders helping to fuel the move higher. Buy stop orders also shown with the on-chart indicator. All right, so there's the initial bullish move in the morning. Let's go back to HIRO. Bullish move up. Kind of a move more or less sideways, and then really starting right around 1230, the HIRO signal started to move lower again and price responded. Let's get a closer look at what exactly traders are doing. I'm going to shift to puts and calls. I'm going to have to jump to avoid the auto zoom. Go back. Notice how both the blue line and the call line were coordinated, both moving higher. Calls, orange line indicates traders are buying calls. Rising blue line indicates traders are selling puts. The directional line is in terms of options delta. Then starting right around 10:10, traders started buying puts. That's shown by the falling blue line. Initially, they were selling calls. A little bit of a divergence there between the call line and the call line and the put line. And then starting about 12:30 again, 12:20. Orange line, blue line moving the same direction. Whenever both lines move in the same direction, that's a very powerful directional indicator. In this case, bearish. Both lines moving lower. Let's go back to the S&P 500. So right around 12:30 is when the S&P 500 broke lower, when the blue line and orange line started moving down in the same direction. All right, let's go back to Hero. Shift over to the equity signal. So right around 10:10, traders started selling calls. Then both lines leveled out. So the put line was really not active until about 12:30, 12:40 in this case. Then blue line, orange line moving the same direction, and price starts to move lower. All right, so quick move up, a lot of grind, and then around 12:30 to 12:40, S&P 500 starts to move lower again. All right, let's take a look at NASDAQ. I'm going to go, actually, let's go back here. Let's start with the total signal. A little bit easier to read in this case. Very similar to the, here we go. All right, so the NASDAQ signal, this is very similar to the S&P 500. This first signal is an index signal combining options trades and market maker hedging activity for NDX QQQ. We'll take a look at the Mag 7 signal in just a minute. So similar to the S&P 500, sharp move higher, right around 950. And then consolidation, then moving lower. And while I'm zoomed out, let's take a look at the Mag 7 signal. Very strong correlation today between options trades and market maker hedging activity in the 7 stocks known as the Magnificent 7: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. So let's go back to the NASDAQ signal first. Now let's zoom in. So in this case, the NASDAQ hero signal actually provided a little bit more of a leading indicator for a move up. Started moving higher, maybe right around 945, made a higher low, and then right around 950, NASDAQ moved higher. Price on this chart is shown in terms of NDX. Then 1010, actually right around 10 o'clock, the signal leveled off, started moving lower, a lot of chop. And really started to grind lower much earlier than the S&P 500. But price really broke lower about the same time as the S&P 500. All right, let's go to the Mag 7 signal now. Very strong correlation. A little bit easier to read today. There's the move up. Shift lower. Sideways. Then 1240 starts to drop lower. All right, let's go to NQ. So here's that move up. Let's see. Here's that move up right around 945, 950 again, aggressive buyers coming in. And in relative terms, the move higher in NASDAQ was much smaller than the S&P 500. Reversal as traders started taking negative delta positions, especially in the Mag 7 stocks. Remember that consolidation. Then 1240. Traders started taking negative delta positions in the Mag 7 stocks. Price moves lower. Oops. Now down to the 475 large gamma 2 support level. QQQ 475. All right, so speaking of Mag 7 stocks, let's take a look at some stocks. First, I want to take a look at Apple. Apple very strong this morning. A lot of aggressive buyers. You can just see they're almost all green volume dots here. I've never seen anything quite like that. That many green volume dots. A lot of aggressive buyers. Price breaks above VWAP. Key price targets, primary targets at 210. Heat map and book map showing a history of the limit orders in the order book. Those are limit sell orders above price, and they tend to act as magnets for price. So limit sell orders at 210, even more at 212. Typical for a stock that come in right after the cash open at 9:30. Looks like all those orders at 212 were consumed. Buyers were exhausted. Let's see what options traders are doing. Let's go to Apple. I'm going to shift to puts and calls first. Now let's go to Apple. Initially, from the open, traders were selling puts and buying calls. Note the flow alert that came in right around 9:45, signaling significant options activity. A little bit of choppy action, and then starting around 10:50, traders start aggressively buying calls. They took the foot off the gas right around that 212 level, and price starts to move lower. So they had already started to buy puts, shown by the falling blue line, right around 11:05. In the 11:30 or so, they start selling calls. Blue line, orange line moving the same direction. Price reverses, but still there are a lot of aggressive buyers in Apple. WRB says, wow, Apple, even with a potential tax in Europe. Yeah, that's why sometimes it just not make sense to watch the news. It makes much more sense just to watch order flow and hedging flow in a stock. So yeah, I saw that news about Apple this morning, potentially bearish, and did not have any impact on Apple buyers today at all. All right, so that's Apple, hero signal, call buyers, put sellers turning into call sellers and put buyers. But the aggressive buyers are still in. All right, so that's Apple. Let's move on. Let's take a look at ARM. All right, the gardening channel says perhaps rotate out of the strong chip sector and flight to the safe Apple. Yes, so Apple is always considered, I think, is generally considered a pretty safe stock. And there's definitely been a rotation out of the semiconductor stock. Let's take a look at. Let's go back to Thinkorswim. Go back to this heat map in Thinkorswim for the SP 500. And you can see where the weakness is today. Primarily NVIDIA. So it should be no surprise to anyone that there's some weakness in the semiconductor stocks that ran up so much in the last few weeks. And it should be no surprise to anyone who listens to me on a regular basis or subscribes to Spotgamma that this weakness is coming in right around options expiration. All right, let's take a look at ARM. This is another stock that had moved up pretty substantially in the last few weeks. Now it's showing some weakness today. Let's see what options traders are doing. Let's go to ARM. Zoom in just a little bit here. So this morning, traders were selling calls, shown by the falling orange line, also buying puts. Call sellers much more aggressive. Blue line, orange line moving the same direction, and price moves lower. So right around 1050, the put buyers and call sellers took their foot off the gas, and ARM begins to consolidate. After finding a low right around 151, let's go back to Bookmap. There's the low at 151. Now, after that move lower, consolidation, as again, options traders have taken the foot off the gas. One other thing I want to point out is the indicators that I'm looking at here in the subchart for stocks. First of all, I have cumulative volume delta again. That's included with Bookmap. I also have the market pulse price change indicator. That is an add-on. That's this indicator right here. There are a number of algorithms that come with the market pulse indicator. I like the price change, and I use this to indicate pullback entries for a short. And often these price change extremes will line up with the large pullbacks or the deeper pullbacks for entries, in this case looking for a short entry, lines up very well with the price change extremes. Noted in this case the high extremes noted by the bright green. All right, so that's the market pulse price change indicator. And again, a very handy tool for marking, helping to mark the deeper pullbacks that you want to use for, in this case, this would be short entries. All right, so weakness in semiconductors. I'll get to NVIDIA in just a minute. Let's take a look at Meta first. Meta was strong early in the morning. Very bullish move up, typical of Meta. Let's see what options traders are doing. Oops. Go to Meta. Again, this price action very typical of Meta. Aggressive call buyers coming in first thing in the morning. Orange line, call buyers. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. Flow alert indicates significant options activity. Note that Meta did breach its call wall. That's also the key gamma strike. And then right around 9:50, call buyers took their foot off the gas, turned into call sellers, price moved lower, and then started to consolidate as the call sellers took their foot off the gas. And also traders at starting around 10:20 were buying puts, also took their foot off the gas. Price consolidated. Now started to move lower again. Call sellers come in, put buyers, now Meta starting to move lower again, down to the 495 hedge wall. All right, Katinga asks, why is Meta option premium too high all the time compared to Microsoft? We can take a look at that in just a minute if I have time. We can take a look at the IV rank. But I think Meta is most likely much more volatile than Microsoft. All right, so that is Meta. Let's go back to Bookmap. Let's zoom in. So remember, 495 is the hedge wall, 500 call wall, key gamma strike, 495 hedge wall. Zoom in. Kind of a rounded top here in Meta. Meta starts to make lower highs. Remember, traders started selling calls right around 9:50, and then Meta breaks below the 505 level, just right around 10:15 after making a series of lower highs. A little bit of a wedge pattern here. Breaks lower, right around 505. And again, the market pulse price change indicator marking good pullbacks for short entries. All right, that's Meta. Let's move on to NVIDIA. Note for NVIDIA, 118.50 is the hedge wall. And I did have to mark this in Bookmap here. It worked so well as support earlier in the day. These levels do matter. So that's the 118.50 for NVIDIA. Let's see what options traders have been doing. Go to NVIDIA. So again, keeping in mind the weakness in semiconductor stocks with NVIDIA leading the pack. And it looks like call sellers really driving price today. Note notional value for calls minus 441 million. Puts is positive. They're selling puts for the day. That is 48 million. So call sellers really driving price. You can just see the strong correlation between price action and the call line. Traders sell calls. Few call buyers come in. Then price reverses lower. right around 1010, and that is when the NASDAQ and the S&P 500 started to move lower, 1010. Call sellers come in, NVIDIA moves lower, take the foot off the gas, price consolidates. Now right around 1240, they started selling calls again. And in just the opposite of Apple, notice all the magenta volume dots here. A lot of aggressive sellers, falling cumulative volume delta, and it did start to level off, cumulative volume delta. Some buyers coming in as price reached the 118.50 hedge wall. Let's go back to Hero. Note that is exactly when traders stopped selling calls right with the touch of the hedge wall, and started buying calls. All right, so that is NVIDIA leading the move lower in semiconductors. Here's Tesla, bullish move in the morning. Price reversed at 188. Let's see what options traders are doing. Let's go to Tesla. Pretty similar to Meta. Strong move higher in the morning. Flow alert. Traders buying calls. Market makers sell the calls. Call wall breach. Price moves higher. Call wall breach. That's where most of the calls are concentrated. And for stock, Spotgamma assumes that traders are long calls, market makers are short calls with a call wall breach. Again, market makers short calls, as those calls go deeper in the money, they become, delta becomes more negative. Market makers have to continue to buy stock to hedge their delta exposure. After that quick move higher, options traders take the foot off the gas. Right around 10 o'clock, started selling calls. Price moves lower. Now the call line, put line have pretty much leveled off. And Tesla consolidating. Looks like finding resistance at that 185 call wall. A lot of chop around that level. Now moving lower below the call wall. Let's go back to Bookmap. Here's the 185 call wall. So break above the call wall right after they open. Traders are aggressively buying calls. They stop, price moves down, consolidation, and then that level acting as resistance. All right, does anyone have any stocks they want me to take a look at? Please let me know. I'll be glad to do that. WRB asked, how's Bitcoin doing? All right, so I actually took coin out of Bookmap here, but we can take a look at Hero for coin. I had a swing trade in coin that came off with the June options expiration, so I just took it out of Bookmap. So Coinbase weakness continues. Traders selling calls and buying puts. Put wall down at 200. So that would be the next target below. So that is Coinbase. Let's see. what is, let's see if there's, what are the Bitcoin ETFs. Moving down as well. Let's check the S&P 500. I'm going to go back to the total signal, take a look at the equities. So the equity signal continues to move lower. Index signal also moving lower. Let's check NASDAQ. Looks like the index signal for NASDAQ has leveled off. Mag 7 moving lower. All right, so again, post call dominated options expiration weakness should be no surprise to anyone who listens to me on a regular basis or follows Spotgamma, subscribes to Spotgamma. Let's go back to Bookmap. All right, so now ES breaking below the 544 volatility trigger that acted as support earlier this today, just after the cash open. Let's check SPX. And note for SPX, it is still above its volatility trigger, just slightly, but that would be the next target below for SPX. If it breaks below. All right, so this would be the SPX volatility trigger. Remember, gamma notional for SPY today was negative, and for SPX slightly positive. So slightly negative for SPY, slightly positive for SPX. Let's check NASDAQ. All right, so again, looking for stocks. Anyone have any stocks they want me to take a look at? Please let me know. I'll be glad to do that. All right, so in the case of NASDAQ, trading well below both the QQQ and NDX volatility triggers, and definitely a negative gamma environment. Apple, aggressive buyers still in. Maybe consolidating around 209, 210. Let's check AMD. And AMD did not really participate in the strong rally the last few weeks, and now maybe showing a little bit of strength today. Maybe traders are rotating out of NVIDIA and ARM and moving into AMD. Let's see what options traders are doing in AMD. Shift to puts and calls. Go to AMD. So earlier today, traders were buying calls in AMD, shown by the rising orange line. Then right around, looks like right around 110, a very large block order came in that's shown by that large vertical line of selling calls, some large institution selling calls there. All right, so bullish morning in AMD, and now shifting negative. All right, what you mean thirsty? Ask for FDX. Sure, let's take a look. I believe FedEx reports earnings later on this week. Earlier today, traders are buying calls. Took the foot off the gas around noon. Net for the day, they are buying calls shown by the positive notional value for the orange line. They're also buying puts shown by the negative notional value for the blue line. Let's see when FedEx reports earnings. All right, so FedEx reports earnings tomorrow after the close. All right, so there you go. There's FedEx. Rainy Days wants to take a look at Bank of America. Bank of America did breach its call wall today. It's at 40. I think traders have been rotating into financials. Not much clue here with options trades, but Bank of America did move higher, then started to consolidate right around 1045. Total signal, see if that gives any more clarity. No, net negative for the day. Our WRB wants to take a look at IBM, then we'll call it a day after this. Let me just check that. Looking back at the earnings chart, I don't see IBM. Does IBM, maybe they don't report earnings this week. Anyway, let's see what options traders are doing. In IBM, strong morning, 10:30, hero signal reverses. Net for the day, traders taking negative delta positions, and another call wall breach in IBM. Now finding support at that level. Go back to the S&P 500. All right, everyone, my time is up. I want to thank you very much for watching. Thank you for your questions and comments. Everyone have a great day, and I will see you on Wednesday. Thanks again. Bye.